Most entrepreneurs running a US LLC think they're safe because they have a business account with Mercury, Wise, Relay, or this kind of digital banks. But if your company is growing, if you're receiving international payments, or if you're moving real volumes every month, these platforms can very easily become your biggest operational risk. And the reason is simple. They were never designed to support companies that scale. I'm Matteo Maglia, Partnership Manager in GloboBanks, the banking introduction company for international accounts. And today I'm going to explain clearly, without any alert, why these tools are useful but not the best long-term banking solution for a serious LLC, and what a proper solid, globally recognized bank setup actually looks like. Let's start with the truth. No one wants to say out loud. Mercury, Wise, Relay or similars are excellent tools for small beginners. They're fast, simple and they're very cheap, but they are not banks. They don't operate as regulated banks. They rely on partner banks that hold your funds on their behalf. And as soon as risk increases, compliance tightens. This is why so many companies experience sudden freezes, delayed payments, locked outgoing transfers, or even accounts closure with zero warning. Not because they're doing anything wrong, but because the platform detected unusual activity, or the partner bank changes its internal rules, or your volume simply becomes too big for a lightweight EMI structure. Now, here is the problem. Many founders don't realize this until it hits them. They grow from 20k per month to 100k to 500k, they hire teams, they onboard the clients worldwide, they receive wires from multiple countries, and suddenly, boom! The platform requests 25 documents, pauses the accounts, or blocks a 60k incoming transfer for review. At GloboBanks, we see this constantly, every single day, and 90% of the time the company wasn't doing anything wrong. They simply outgrow the platform. There's another issue nobody mentions: the credibility. When your LLC starts working with bigger clients, especially in B2B, your banking partner becomes part of your reputation. A serious counterparty looks at your payment instructions. If they see a lightweight fintech or an EMI, many raise internal risk flags. Some refuse to send high values transfer to those platforms altogether. Not because they hate the brand, but because they need institutional grade reliability. Then there's the matter of funds protection. On these platforms, your money is not insured under a dedicated supervised deposit structure. You are trusting a chain of intermediaries. The platform, its third-party banking partner, its internal compliance, its risk team, its regulatory constraints. If any part of that chain fails or changes policies, your entire business stops. Compare that with a fully regulated, fully licensed financial institution where funds sit under protective structures, often covered by statutory frameworks, strong auditing, and multi-jurisdiction oversight. The difference is night and day. And another limitation: no credit. A real business needs credit lines, working capital, revolving credit, corporate cards with proper limits, access to financial instruments. But fintechs are not built for that. They can't extend meaningful credit because they don't have the regulatory structure, the capital requirements, or the internal underwriting to support it. Most founders only realize this when they're ready to scale and suddenly discover that their bank can't help it grow. And let's talk about international operations, because if your LLC deals with multiple currencies, you need accounts that hold funds natively in those currencies with proper account numbers, not shared pooled accounts. You need fast settlement, you need direct correspondent banking, and you want to avoid the constant routing limits that fintechs impose. The truth is, high-tier financial institutions offer multicurrency accounts with clean, dedicated rails, strong foreign exchange execution, and far fewer operational restrictions. Founders feel the difference immediately. And here is the part most people ignore. Compliance at proper financial institutions is strict but predictable. There are rules, there are processes, There are escalation paths. There are relationship managers who understand international profiles. With fintechs, unpredictability is the rule. They don't have the staff, the experience, or the infrastructure to handle high volume, multi-jurisdictions business models. That's why closure and freezes happens too often. Now, I'm not saying Mercury, Wise, or Relay are bad. They are not. They serve a purpose. Early stage, simple operations, small transfers, but they're not designed for companies with high monthly volume, international clients bases, complex ownership structures, multiple entities, or seven-figure annual revenue. Those companies need real banking, not placeholder solutions. At GloboBanks, this is exactly where we step in. When a client comes to us with an LLC stuck on fintech platforms, we evaluate their industry, their projected volume, their international exposure, their client base, their transfer patterns, and their long-term goals. Then we match them with real, regulated financial institutions, some physical, some advanced fintech banks that support clean international wires, native USD, Euro, and other currencies, and full multi-jurisdictional compliance, fund protection frameworks, institutional infrastructure, strong onboarding for foreign-owned LLCs, and long-term account stability. This is the difference between running a business and running a business without sleeping with one eye open. Because at a certain point, the question isn't, can I save $12 on a transfer fee? The real question becomes, is my business protected? Is my cash safe? Can I trust my banking partner at scale? Will my wire arrive tomorrow, or will my account suddenly pause for review? And for companies operating internationally, banking is the infrastructure that holds the entire business together. So, if you are an entrepreneur running a US LLC and you're grown beyond the early stage phase, or you had freezes, delays, or warnings on fintech platforms, or you simply want institutional stability, GloboBanks can help you move from basic banking to strategic, high-tier, long-term banking that matches the levels of your business. If you want to find out which solution fit for your LLC based on size, volume, industry, and jurisdictions, you can complete the free assessment below, and we'll give you a clean roadmap. Let's get your business the banking it actually deserves. I see you in the next video.